What's up, everybody? Thank you for tuning in to another episode of the CPA Zone, the podcast where we discuss tax strategies and accounting tips for entrepreneurs and real estate investors. My name is Ryan Pulis, and our company, the Pulis Group, offers tax planning and advisory services for entrepreneurs like you. Whether it's bookkeeping, tax planning, or CFO services that you're looking for, we've got you covered. What's up, everybody? Welcome to another episode of the CPA Zone. Today, we're joined by a special guest, Michael, the managing partner at SMEED CPAs. So Michael's a fellow tax practitioner and tax advisor. So we're really excited to talk to you today about some tax strategies. We're going to go into the One Big Beautiful Bill, which at the time of this recording has passed the House, still making its way through the Senate and needs to be signed into law. But there are some provisions that Michael and I both feel are going to remain intact regardless of what the final outcome of this bill is. So that should be good news for business owners and real estate investors. So, Michael, if you don't mind, would you mind introducing yourself? Give us a little background to the listeners and maybe tell us a bit about yourself and how you got into the tax space.
Oh, thank you, Ryan. It's good to have me on board with you today. Again, like you said, my name is Michael Uadiale, and I am the managing partner of SMEED CPA. SMEED CPA has been in practice since 2007. The company is now officially a teenager. We turned 18 years January this year. Um, just before COVID, we pivoted from just being in a brick and mortar location and we moved to becoming fully virtual. And we've been extremely successful with that because the people who work with us, they come to us not because they want to sit across the table from a CPA, but because they are looking for value from their CPA practice. We still have 3 brick and mortar offices, one in California, one in Georgia, and one in Texas. But literally all of our 18 team members work primarily from home. And we continue to focus on providing tax and advisory services because that's the future for most business owners. I love what I'm doing. I never expected I would still be on this seat for 18 years, but I'm still kicking stronger because I just love the excitement of being able to bring value to my clients.
All right, awesome. So I guess maybe we'll go right into our topic today, the One Big Beautiful Bill. So now that we've had a little time to kind of take a look and see what's in there, there any parts that really get you excited and I think will be a good thing for your clients and that you hope will stay in there and make it through the Senate version?
Yeah, I think I'm really excited for the bill. I get the fact that from a high level, there are some challenges or complaints about the amount of deficit it's going to create for the country's overall deficit. However, from kind of putting a spark into the economy, I'm really excited for the bonus depreciation. For those who may remember, when the TCJA passed in 2017, that was one part of the bill that everybody loved. And when the House tried to do something a couple of 2 years or so ago, they tried to bring it back. Now, when we look at the One Big Beautiful Bill, the one thing that is front and center is the bonus depreciation. Now, when it comes to real estate, which is one of our top area of specialty as a niche practice, I always say there are 6 things that drive real estate. I call them the 5 Ds and the 1 T. Diamond, meaning people get married, and then when they get married, they want to move into a new home. Diapers, people have babies, and then they want to get a bigger home, or things like there is free access to credit, and people want to take advantage of that. Or sometimes people divorce, or there is a death in the family. All of those are 5 things that really drives real estate. But one big thing that drives real estate the most is the tax regulations. In fact, the one great thing about the US tax code is that I personally see the code as an incentive. The government uses the code to incentivize us all to behave the way the government wants us to behave.
Yeah,
And I
yeah,
think,
exactly. Totally
yeah,
agree.
the government has been very successful because I've had the benefit of looking at many countries. You find that in the United States, the one thing the government is not putting too much of its dollars into is real estate. They have allowed the private sector to continue to be the one to be primarily responsible for real estate activities. And the success has come from the tax benefits that are in real estate. So this bonus depreciation is really exciting because right now, as it stands, bonus depreciation stands at 40%. But in the proposed bill, it's now 100%. I mean, really, when you step back and you take a look at it, most of us, when we go into any kind of real estate deal, the maximum we put in out there is 25% of our money, right?
Yep.
And then you take other people's money from the bank to finance the balance 75 or 80%. But with 100% bonus depreciation, you are taking tax benefit for dollars that you did not even invest in the first year. What that allows you to do is, if you're a good real estate professional who really qualifies and really know what you're doing and you know how to continue that arbitrage, it allows you to recover very quickly, even not just only your investment, but the bank's money that has gone into the real estate activity. So I am really excited, and I do think the bonus depreciation part of this bill is going to pass the Senate because even within the Senate, we do have lots of people who are very interested in it as much as the president is. So it's a big excitement, and I think it's going to really spur up the real estate industry once again, whether or not there is good credit or easy credit available for people to buy.
No, I totally agree with you. That is, I think that'll stay in whatever final version we get. Going to be really good for real estate professionals having that 100% bonus come back. I mean,
Yeah.
like you said, generally you're putting in about 25% of the purchase price when you buy a property.
Mhm.
If you qualify as a real estate professional and have a cost segregation study done, you're going to get about 25% allocated to property that's bonus eligible. So Uncle
Right.
Sam, you're going to get it right back, and Uncle Sam's kind of putting your down payment on that property for you, or possibly some more.
Yeah.
So yeah,
It's a no-brainer, and it's just really exciting to see it come back. So we can't wait. I think the thought process is that the Senate may be able to get this bill across to the president before July 4th recess. So we look forward to that.
yeah, I hope so. Um, yeah, and I know I saw recently. I can't remember where I read this. They had a couple like must-haves that the Senate side talking. One was bonus depreciation. They want to keep that in there. The other thing that they're determined to keep is the bringing back expensing, the R&D expensing,
Oh
which
yeah.
has
Oh
to
yeah.
be amortized over 5 years, which
Yeah.
that
So
was a
the
terrible move to begin with. So like,
yeah, so the way it was with the current law is really a terrible move because when you truly analyze the way the R&D is set as is now, it does put you sometimes in a situation where it becomes a negative return for you. But I think with what the bill is proposing, is pretty much saying, hey, you will be fully expensing all domestic R&E expenses for the year they occur, right? But foreign expenses will remain amortized over 15 years. But I think this is a great move also in the right direction. So when I look at the bill from the perspective of entrepreneurs, whether real estate or in the manufacturing space, I think there are just a whole lot of great, wonderful things there that I'm really hopeful that they will really spark the economy. The other one is the manufacturing deductions. I have not read what the blue book is going to look like on the manufacturing deduction. But if you take a look at it, it tells you it's 100% expensing for manufacturing structures.
yep,
So I like to look at the examples of what they mean by manufacturing structures when we are down, because like you know, Ryan, in taxation, words can mean a whole lot of things. So,
yeah,
but if it's what I think it's going to be, that would really be also awesome to be able to expense 100% of your manufacturing structures. Okay, so that's a great one that's also coming. So I think the bill, from the perspective of the tax community and for entrepreneurs, really has a lot of good things there. Now, the section 199A flow through deduction, the proposal there is to move it up from 20 to 23%. That's also great. So for business owners, I think they should be excited that this is coming down the wire.
Yeah. Yeah, I totally agree. The way they made that new calculation for the 199A is a little, that's going to take some getting used to. I think everyone is just getting used to the original calculation. Now they're going to tweak it a little bit, but it's nice to see it going up to 23%. So I hope that.
Yeah. Yeah, I think it's always a good area for planning for business
Yeah. Oh, yeah.
owners, just because if you are able to do the planning well and how you time your flow through income, you can
Yep.
always get yourself to be within the threshold where you qualify for it.
Yeah. Yeah, definitely. Yeah, it'll really benefit those that take advantage of the planning. All right. Awesome. So I know we both talk, or we both work a good bit with real estate professionals and real estate investors. Do you have a favorite real estate tax strategy?
Oh, real estate gets me really excited just because, seriously, because when you look at the tax code, like I said earlier, the US government have been extremely successful with getting private enterprise to
Yeah.
drive real estate. And the underlying success in that area is directly tied to the tax strategies. Now, I think most people talk about it, but they really don't know how to walk the talk, which is what it really means and what it takes to be a real estate professional. Okay. Unfortunately, even within the CPA profession, I find sometimes when people come to our office, our firm, they seems to have been misadvised as to how to qualify. There seems to be just this complete um, perception that if you hold, for example, a W-2 job, you cannot qualify to be a real estate professional. That's not necessarily the case. I think the key thing is to truly see how to make somebody qualify to be a real estate professional. In terms of what my favorite strategy is, I think it's really, really being able to leverage cost segregation and turn all of the losses that would otherwise have been passive to becoming active losses, so as to be able to just leverage that against any other active income that you have. We work a lot with clients who are in the healthcare industry, physicians, dentists, and owners of healthcare enterprises. And the one thing many of them struggle with before they work with us is the fact that they have all of this big W-2 income, or they have all of this K-1 coming to them, and they are not able to leverage how to reduce the taxable income. I think with real estate, you really can do that if you qualify as a real estate professional. Now, the big, big catch there is people must learn to follow the rules. I always say to people, if you want to get the benefits that the big boys get, you got to learn to behave like the big boys, right? Um, yeah, because it's as simple as that. You could be a great superstar. If you don't follow the rules of the game, the umpire or the ref has the right to kick you out of it. And the ref happens to be the Internal Revenue Service, right? So
Exactly.
just following the rules will really get you a whole lot of tax benefit. Now, if you leverage cost segregation and the real estate professional status really well, it could really accelerate any entrepreneur's uh, time to get to their financial freedom faster than they ever imagined. So typically in our practice, we try to work with entrepreneurs so that they can get to that goal of financial freedom between 5 to 7 years, as against people thinking it's going to take them 15 years to get there. And one of the main tools we use to do that, especially when these entrepreneurs are invested in real estate, is to really translate their tax strategy. It's about what we call the pigs versus the PARs, meaning passive income generators versus passive activity losses. If you really know how to leverage those, it just turns somebody's tax return to a huge ATM machine that frees up more cash for the person. And then what that does is you as a real estate investor, you find that every year you put yourself in a position where you're getting more money to be able to do more real estate deals. And you get to your financial goals faster than you ever thought is possible. So I call it the pigs versus the cows. That's one of my favorite strategies.
These versus the palace. I like that. Yeah, that's a great point though, because really when you take advantage of the cost segregation study, for example, and the bonus appreciation, the tax savings, something like that can unlock. you take those tax savings and put it right back into your real estate portfolio and kind of repeat the next year. And next thing you know, you're doing two properties a
Right.
year, and then two to three or four, and it continues to multiply and
That,
compound. Like you said, that's really going to get you to that financial freedom number much quicker when it's done right. So
yeah.
yeah, no,
And
that's
I call that velocity.
yeah,
So for me, for a real estate person, I think the first thing to know is have your cheat sheets
yeah,
of the kind of portfolio of properties you want to hold. See, most of the time, beginners make the mistake of looking through all kinds of subscription lists where they are giving 5,000 properties to look at. And what happens to most people, it becomes a paralysis of an analysis, right? But you got to make up your mind what kind of properties you want to buy. Do you want to buy class A, class B, or class C? What market do you want to be? Do you want to be in a cash market? Do you want to be in an equity market? Or do you want to be in a hybrid market? Okay. What are the other parameters that you want to use to drive the kind of portfolio of real estate you want? Once you have that, I call it a 3-minute decision. Because once you have that 5 to 7 criteria of what a property is that fits your financial freedom goal, it's easier then to find that property in a haystack, right? It's no more like looking for a needle in a haystack. It's more like you're looking for a rock because you know what that rock looks like. And
yep,
at that point, it's easy to be able to just get a property finder who specializes in that kind of market. And it's easy for your property finder at that point to be able to just say, hey, I got this property because it meets what you've already given to me to look for. So once you have that, then the next thing is to arrange for yourself a good financier. It's not when you have a deal going on, that's when you're looking for a financier or a bank that will help you do the deal. So those are the things that makes for success in the real estate space. And of course, I'm biased about that, but having a great tax advisor who truly, truly understands the whole passive activity laws, the entire section 469. I know that may not mean something to most of you listening, but really, once your CPA is great at that, then that's the kind of CPA you need to be working with if you are a real estate investor.
yeah, I totally agree, and I really like the point you mentioned about kind of sitting down and deciding up front what what type of property you're looking for, what market. You know, this when you invest in real estate, when you do it right, it really is like running a business. So putting that together is like writing your business plan before you just otherwise, like you said, you're overwhelmed with all the different options. Like I see too many people that they read something about new short-term rentals and they start going down that path, and the next thing you know, it's wholesaling, and they go down kind of get spread too thin. You really and it's fine to explore all those because I know, like for me, if I hear about a new uh, type of investment that I hadn't heard of before, it's like, oh yeah, I'm interested. You want to go down that rabbit hole and learn about it. But where it comes to where you're going to deploy your money, you should really sit down, focus at least initially until you get started and you've kind of got some deals under your belt where you feel comfortable in a particular space and may always look to expand. That's great. But when it's your first deal, just kind of pick where you want to go and really focus on it. And if something rules that out that makes you want to change your mind, sure, but you don't want to kind of go everywhere. You're just too shallow in too many spots and end up losing money that way.
So you use the word focus. So we have a 10-step process that we walk our clients through in our advisory engagement. Focus is the step number 2.
Uh,
Okay. Yeah. Um, because I think there's just this myth in financial planning where people feel they got to diversify for safety purpose. And we are fine with diversification, but the way we look at diversification is be an expert in one area. So if you are diversifying within that area, that's fine. Now, when we talk focus with clients, you could say you want to do real estate. I have clients who all they do is they're doing storage
yeah. Yeah.
facility. I have clients who all they do is mobile homes. Because the reality is, the more you get focused, the more you know about one industry, the more you know the pros and the cons. It's easier to minimize risk when you become an expert in
Yeah.
an area instead of just going into multifamily or going into single family because your Uncle Joe or Auntie Sally is into that, right? Because
Yeah.
what happens most time, people make losses or lose their shares actually in the process when you start trying to invest in areas that you have not built the level of skills and knowledge to drive success in. So focus is really a very big thing. And I know it drives some of my clients crazy when they first start with us, but we
Yeah.
really literally force them to say, we want you to make a choice. Determine where you want to be within the real estate space. Is it going to be commercial? Is it going to be residential? Even within the residential, what kind of properties? That level of focus is very important for success.
Yeah. Yeah. No, I totally agree. All right. That's awesome. Um, yeah, I like that 10-step process. That's good.
Yeah, we have a 10-step process. It starts with you doing what we call the dream exercise. The dream exercise is more like a financial vision board where we work with you. You let us know where you currently stand in terms of your assets and liabilities. And then we ask you to paint a picture of where you want to get to, right?
Gotcha.
And then tell us in your mind's eye how long it's going to take you to get there. Okay. So that's what we call the dream exercise. Then the next thing is we say, let's say focus. Once we have you get your focus right, then we move to the next step, which is we want you to build your team. Your team should not just only be your tax advisor, should be your financier, should be your insurance guy, should be your attorney, and stuff like that. Okay. And then we move on to criteria. Those are the first steps we go through on the website. Then we move down to the tax side where we begin to look at your entities and say, all right, how should your business be structured? Once we move out of the entities, we move into tax planning proper and deductions. Then we begin to look at your kind of money. How do you make your money? How can we translate how you make money from not a bad one, but maybe an okay one to an excellent one? So when I talked about the pigs versus pies, you got to learn how to convert the same dollars from one that is taxed badly and moving it into one that has preferential taxes. And then we look at what we call eliminations, and then the last being deferrals. Now, typically, when we work with clients, we would have walked you through 9 steps before we come to the last. The last is deferral. It's our last because for us, deferrals is just kicking the ball down the road. Okay. And that's that my least favorite, but it's when all else is done, whatever is left that is still taxable, can we kick that ball down the road? Because
Yeah.
the goal for us is how can we continuously work with you as a client and bring you down from whatever level of bracket you are to a lower level until hopefully we can get you as close to zero tax bracket as possible.
Yeah. Now that makes sense. That's a pretty cool layout. I like that. I know earlier we were talking about real estate professional status before we hit record, and you had mentioned that you're in the process of developing an app that's going to help real estate professionals track their hours. So I'd love to talk about that a little bit if you have some time, because I think a lot of listeners would be thrilled to have something like that, and a lot of people that tracking the time is probably one of the more painful parts of qualifying as a real estate professional, especially
Yeah.
when you work full time as let's say a realtor, developer. You know you've got the hours, but then the IRS still wants you to document it. It's just like,
Yeah.
and I get it. Working as a CPA for many parts of my career, I had to keep timesheets, and it's like the worst thing to do. It's like, come on. But
Yeah.
having that documentation in place in the event you're ever audited or examined by the IRS, it's key. So if you want, please tell us a little bit about the app.
Yeah, we are really very, I mean, this has been a personal pet project of mine since 2019. I think 2019, my eyes opened and I kept asking myself, what the heck? Why is it that we don't have something there that will really make it easy for people to track their real estate hours in a way that can be foolproof and audit proof? Okay. Yes, there are, I think, two apps out there that have beat us to it. But the one thing I didn't want us to do was to just rush an app out there,
Yeah.
and the app does not really meet Monster. So we came up with what we call My 750 HRS tracker. That is MY 750 in numerals, H as in home, R as in rainbow, S as in Sam, tracker, TRACKER.com. So if you go onto that website, you can download the app. You can also download it on your Android or your iOS phone, right? What we've done there is we've made our app a multi-purpose app, meaning one of the challenge most people have had in tracking their hours is not, like you said, the fact that they don't qualify. It's just the hassles of being able to just keep this time in a contemporary manner. We've built in quite a lot of AI tools into our app because we do not want it to just be a time log. We want the app to actually aid our subscribers in being able to know whether all of the time they have put in qualified. Because when you really look at the entire section 469 of the code that talks about the real estate professional, you want to look at, okay, does this person get that 750 hours? Is that 750 hours or whatever that number of hours is that more than 51% of their entire work life? Then more importantly, in there is the activity time spent material. Okay. So most times that's where it becomes blurry for most people, even for some CPAs, right? So most CPAs take the approach of, oh no, you don't qualify, which is not true. Because when you really go through section 469 of the code, there are 7 tests of materiality that can qualify somebody to be a real estate professional. So one of the things we did was we did a lot of AI learning to our app. So as people put in their time, um, our app is able to even guide and help you make a determination as to where should your time really go. Because one of the great things about taxation, two CPAs could have the same figures and end up with different results. Now, I'm not saying you have to lie, but being able to understand how you describe something in terms of what that task is could make that tax either be just a general real estate hours or a material activity hour. So it's so important that people be able to do this with ease. I think, like you said, Ryan, most of the pain that most people go through or why they are reluctant to really track hours is because it just feels tedious, right? So
Exactly.
what we did is we made us to have a web app. If you are the kind of person who wants to do it on your computer, more power to you. You can do it on your computer. If you want to do it on your phone, you can do it on your phone, whatever platform your phone is on. So it gives you that whole ease of being able to just do things. Because, like I was saying, the tax court really frown at records that are not kept as the events are occurring. But what our app does is it helps you to do that on a real-time basis without feeling like this is another burden on you.
Yeah. That's awesome. What was that website again?
The website is MY, M as in Michael, Y as in yellow, the figure 750,
Okay.
H as in home, R as in rainbow, S as in Sam, T as in Tom, R as in rainbow, A as in apple, C as in Charlie, A as in kite, E as in Edward, R as in rainbow.com.
Okay. Awesome. So my
That's the
750 tracker.com.
yeah,
Yeah, I'll make sure to drop that in the show notes page. That way,
yeah.
anyone wants to go take a look at the app and download it, they'll have it there in the notes. That's awesome.
I think one good thing we're doing, again, I'm so proud of what we've done. We don't just want people to subscribe to the use of the app. One of the things we're building in slowly as we begin to ramp it up is uh, there's going to be a lot of educational guidance as
Oh,
our support structure. Yes. In fact, we are contemplating doing once a week call for subscribers so that questions they may have with relation to real estate, not just only qualifying as a real estate professional, whether it be, okay, do I need to be a limited partner, a general partner on this deal and all of that. We want to be able to give that educational support to our subscribers because the whole idea for us is anything to help our clients get to financial freedom goals as quickly as possible. we want that to happen. So there's going to be quite a lot of free educational resource through subscribers there.
Okay, awesome. Well, that sounds great. Yeah, I'll definitely put that in the show notes page. I think we're coming up on time, but is there anywhere else, like how can our listeners best find you? Whatever you give us, I'll put it in the show notes page. But if you want to just kind of put a plug out there so people can find you online sooner, that'd be great.
Yeah, I think the easiest way to find me is shoot me an email because there's somebody who monitors my email full time as their job. Is taxes@smeedcpa.com. That's T as in Tom, A as in Apple, X as in zeros, E as in Edward, S as in Sam at SMEEDCPA.com. SMEED CPA is SMEED CPA.com. If you shoot an email to me, somebody's going to take a look at it and respond. And if you need to schedule something, happy to work and talk to you and see how we can be of help to any person. We also have a school platform where we've put some videos. Uh, that video lessons are focused 100% right now on section 162 of the code. We tend to put in another 6 different videos into that platform before the end of this year. Again, we just believe that education is so important to entrepreneurs. And if you know what you are doing, then it's easier to be successful and not just gamble with your taxes.
Yeah, definitely. All right. Well, I really appreciate it. It's been great talking to you. We'll have to do it again sometime.
I look forward to that, right? So thank you so much for having me here. And hopefully we can reconnect and talk about the one beautiful bill when it becomes an act. And that
Yeah,
would be
yeah, absolutely.
that would be a great one because at that point in time, we hopefully both would have looked at the blue book and see the details behind the
Yeah,
provisions themselves.
exactly.
All right,
All
yeah.
right. So that
Good.
about does
Thank you
it,
so much.
everyone.
Okay, take care.
All right. Take care. That
Bye
about
bye.
does it for today. If you found value in this episode, please leave us a 5-star review and hit that like and subscribe button. Until next time, have a great day. One last thing before you go. We have put out a free ebook for our listeners. You can find a link to this in our show notes. It's called the Rental Real Estate Investor Tax Guide and covers all the basic tax related information for real estate investors. We hope you like it. Again, go to the show notes to download your free copy. So that about does it for this episode of the CPA Zone. Thanks for listening, and I hope you found something valuable that you can take away. We are taking on new clients, and if you'd like to work with us, then go to our website and fill out the client intake form on our contact page. This can be found at thepulicegroup.com/contact. That's ThePulicegroup.com/contact.